Thank you for coming to the Russia panel, or as we aptly renamed it, the Morbid Curiosity panel this year. Obviously, Russia's been on the news in much detail recently, and for those of us who are doing business in Russia, it's been a very challenging time, to say the least. My name is Alex Kohler. I'll be moderating the panel. I've been living in Moscow since the early 90s, running a number of large American companies like AT&T, Arcicol International. I run a Russian media company. And for the last 5 years, I've been focused on bringing leading American brands to Russia, like Wendy's, Arby's, Nathan's Famous, and most recently, GNC. As you know, those of us who are doing business in Russia are very concerned with the current sanctions being levied against Russia. Russia has now joined 20 other countries in the likes of Chad, Somalia, North Korea, who are being sanctioned. Being the 7th largest economy, this is a very interesting test for everyone. Even as President Obama says, he doesn't know how long it'll take for sanctions to work. So, having said that, we are all here and we still really believe in what we do, and we look forward to sharing our views and opinions with you today as to where this thing is going. Let me introduce everyone to you. On my left is Stephen Hellman, the head of Credit Suisse in Russia, a veteran, a true veteran, expat in Russia. Michael Kuchment, a leading retail expert who made his name with MVideo, Russian Best Buy, a very successful story with a $1.2 billion IPO in Russia. We have Jim Gansinger, the owner and head of Subway in Russia, which has become the biggest quick service restaurant chain in Russia today. And Dmitry Shitsley, representing the VIM Fund, a very successful Russian fund, has done a number of high-profile projects like Four Seasons. If I may add one point on sanctions, as we look through the announcement of these sanctions, clearly the long-term effect of them is very troubling. The short-term effect has been, I would say, not as strong as Russians have expected. We saw a jump in the Russian stock exchange both times of the announcements were made, 2% on Monday after the announcement of the sanctions, when 17 companies were sanctioned. Interestingly enough, when I looked at the list of the companies, the top of the list was a company of which I was a CEO several years ago, which has nothing to do with anything in the international arena. So, other than the fact that it's owned by somebody that's very close to the circle of Putin. So it's still unclear as to what the focus of these sanctions is. My bigger concern in this whole situation is the blowback that Russia can and have already started against American companies. Case in point, Visa, in the first round of sanctions, Visa sanctioned 2 major Russian banks, and thousands of their clients were left unable to use their Visa and MasterCards. As a result, Russia has instituted first steps in issuing their own pay system, just like China and Japan. What this basically does is, a company like Visa does $2 billion of transactions per day in Russia. I mean, think about that, $2 billion in transactions per day. They have now been asked to park $4 billion in a Russian bank as a security of 2 days worth of transactions. So if we look at $700 billion of transactions will be wiped off and as a result of this situation we're facing. So, with that in mind, I guess my first question to you, Stephen, is what do you tell your clients? I mean, where is this thing going? I mean, what kind of recommendations can you give in this most troubling time for all of us?
Well, Alex, that's a very good question, and it's a question that many of my clients are asking me, all of my clients are asking me today. And what I tell them is that you have to take a long-term view when investing in Russia, and it's not dissimilar, frankly, to any emerging market. And you have to consider where Russia has come from in only a period of 20, 25 years. it's such a transformation from a Soviet, effectively isolated society. I think the key theme that I want to hammer on today is that investing in Russia is very much sort of a 2 steps forward, 1 step back type of environment. But if you do the math, at the end of the day, you do see progress. You see progress over time, and what it requires from our clients is perseverance and a lot of patience. And apropos of that, Credit Suisse, the firm that I work with, has been involved in Russia for well over 20 years. And as I tell my clients, we've made a lot of money in Russia and we've lost a lot of money in Russia, but we have stayed the course. We've been there since 1991. We were the first Western bank licensed by the Central Bank of Russia. We famously lost something like 2 billion Swiss francs when the country went bankrupt in 1998. But we've stayed in the country, and today we are one of the largest investment banks in the country, Western investment banks. I run roughly a $500 million business. We bank well over 50% of the richest top 100 individuals in the country. So it's a very important growth engine for our private bank. Personally, I have been involved in Russia for 30 years, and I've seen obviously many cycles and much tumult, much transition in the country. I first arrived in Russia in 1985. It was about this time in that year that you may recall that Chernenko died and Gorbachev took power. I could see at the time as a student, I was a student there at the time studying in Leningrad, and I could see when I arrived that it was really a country imploding upon itself. It was a failed system. And then Gorbachev came to power, and a liberalization process began, which culminated in ultimately the demise of the Soviet Union and the East Bloc, and the rise of the modern Russia. I then returned in 1993, and at that time, in fact, I was flying into Russia the day that President Yeltsin bombed the White House or fired on the White House. Frankly, not a dissimilar situation to what we're seeing today in the Ukraine, in that the White House had been taken over by communists and other types of insurgents, and Yeltsin was forced to go in and rid them from the government structure. And after that, a broad privatization of the economy began. That was a very difficult process, but a very important and a necessary one. And then fast forward to 1998, when I was a banker already in Russia, and Russia ultimately succumbed to an environment of very low oil prices and the contagion that swept in from Asia, the financial crisis that began there, and the country ultimately defaulted on its notes. But literally from the moment that occurred, the ruble devalued tremendously, and what we saw was a huge spurt in growth. And if you actually, if I could ask you to put up slide 19, please. Slide 19. You can see that roughly from that decline from the default in 1998, you could see a phenomenal rise in the growth of the stock market. At its peak in 2008, when we came to the next crisis, the market had risen over 6,000%. So I want to return to the theme that I started with, which is that in Russia, a country that's a 2 steps forward, 1 step back, the opportunity to come into Russia is when it takes that 1 step back. Because it truly is a country with tremendous growth potential. And if you turn to, slide 16, you can see some of the very positive attributes of the country. It's quite large. It's the largest in Europe with 150 million people. Approximately. Largest landmass. Virtually every element on the Mendeleev table is represented in Russia, and it's probably the leading natural resource base for many, if not most, of those elements. So a fabulously rich country. GDP is 7 or 8 globally, extremely low debt to GDP, and very importantly, a very well-educated and growing middle class. And I think for Westerners thinking about investing in Russia, I think that obviously there's quite a sense of concern or fear of investing in the highly politicized sectors like oil and gas and minerals. But where there's tremendous opportunity that we see today, it's in investing around the consumer. And if you turn to slide 17, please. You can see, well, I'm sorry, actually the next slide, slide 18. You can see the opportunity in terms of consumer spend per capita, where Russia is relative to the US and the UK. So the opportunity of growth is tremendous. And then the amount of disposable income, it's quite high in Russia, but the gap to the US is still very significant. And where we've seen great success among my clients is where they focus on the consumer sector. We just took a company public called Lenta. We priced the IPO literally the day before Ukraine.
A cash and carry chain.
Yeah. It's a hypermarket chain in Russia. It's owned by TPG. You're all familiar with TPG, and VTB Capital, which is the private equity fund of one of the largest state banks. They invested really following the crisis in 2008, 2009. And I believe TPG invested a little over $500 million, $550 million into Lenta. And that investment in just a period of 3 years has returned almost 4 times its capital. That is a company that is growing top line 25 to 30% a year, and will do so for the foreseeable future. Will probably double its size in the next 3 years. Alex mentioned the declines in the stock market, or actually we've had a slight rally, but really in effect the market has come down fairly dramatically over the last several months in anticipation and then as a result of the events in Crimea and the Ukraine. And you have companies now that are global world-class companies. Sberbank would be an example. This is a bank that's growing, has a return on equity that is 25 to 30%. Which is virtually unparalleled in the banking industry. It's now one of the largest banks in Europe.
But do you think that the downgrading of Russia and Russian companies to near junk status will have a long-term effect, or will it be an opportunity to invest in these companies?
Well, again, I don't have a crystal ball, but if history is any guide, it's when that one step back occurs. That's the time to get in. And as I was saying about Sberbank, during the crisis of 2008, it, I believe, traded to just below, well below $1 a share. And since that time, actually at the peak before the market began to retrench a bit, it was trading at over $4 a share. So a tremendous return for investors over that period. Today, a bank, again, with almost a 30% return on equity, is trading at just over 1 times book value. So and this is a bank that is not going to go away. It is extremely well capitalized. It controls 45 to 50% of all deposits in the country. So it is really an engine of growth. And it's an opportunity certainly for investors to play the broad Russian consumer sector. You mentioned one thing, the investment in non-energy sector. And I think, if I may use the occasion, we have actually a representative of the Russian government, albeit an American citizen here, through an institution, the Russian Direct Investment Fund, which has been instrumental in providing co-investment to those who are coming in and making a difference. And I'm wondering, Sean, would you mind making a comment on the current situation, and is Russia now looking to turn away from its traditional partners like Europe towards East? What does this all mean? How do you comment on this? Can we get a mic, please?
Thank you. Thank you.
Thanks, Alex. My name is Sean Glodek. I'm a director of the Russian Direct Investment Fund. He is correct. It is a fund set up by the government under the oversight, I would say, of the president. We created 3 years ago, and since then we've invested over $1 billion and brought about $3 billion of foreign capital into the country, mostly from blue chip names you all recognize from the US, from Europe, from Asia, from Australia and other places. Sanctions, as you described, are not welcome by anybody, it sounds like by people who give those sanctions and people who receive them. And you have the result of a bit of a twilight zone when the sanctions are not really strong, but they do have a ripple effect on the general investor confidence in the markets. Where we saw most impact is really in IPOs. Steve here mentioned Lenta. I was down on the last day before the IPO market shut down for Russian companies, and that is expected to continue for a while. What he also said is that what we see day to day is extremely important, is that you have a repricing taking place in Russia to effectively adjust and then some for all those risks that investors see. So if you are a long-term investor, and those are the type of investors we're dealing with, this is a fundamental buying opportunity. In the last just month and a half alone, we've seen a doubling of our pipeline of investment opportunities. We've seen better pricing, and we've seen more flexibility on terms. So we think it's a buying opportunity. We're going to actually announce quite a large number of transactions in the remainder of the year. And we're pretty bullish over the long term. Over the short term, you will have ups and downs, no doubt about it, especially in the public market, which is very thin. It's undercapitalized, and a lot of companies trading there are semi-private, so it's really hard to gauge the real value just to the public market. Your second question, or maybe the first question that I'm addressing now, is we have not seen really change in the investor universe. Traditionally, when you come to US, for example, North America, corporates are very active in Russia, and they continue to be to do so. Some of those have reconfirmed their interest to grow, and they're telling us till they get the specific court order not to do things in Russia, they will, because it's such a great market for them. When it comes to public institutions and public pension funds, where more often than not you have representatives from the government, representatives from the labor, these decisions tend to be influenced by more than just fundamental economic value, and we respect that. And because of that, it has been tougher for us to secure long-term commitments. However, we have most of the money we received, and by now we receive about $12 billion on top of our $10 billion that we got from the government. So the $12 billion comes primarily from Middle East, from various countries there. It comes from China, it comes from other Asian countries, and also some countries in Europe. And we see continuing interest to invest side by side with us. So not to minimize the sanction environment, which is important, but from the investor perspective and from a foreign capital doing good in Russia and making great returns like TPG with Lenta, we see actually better environment now than we did 2 months ago.
Thank you, Sean. That's excellent. If we may come down to a little bit of a micro level, coming to you, Jim. I mean, you've been very successful in Russia. I mean, you, by sheer numbers, now have, I believe, near 700 locations for Subway, which is a staggering number considering you were a couple hundred just a few years ago, I believe. Can you maybe talk about your story of how you came to develop Subway, and what do you see the prospects for your brand, and do you believe these sanctions will have an effect on you on an everyday basis?
Thanks, Alex. I'm Jim Gansinger. I'm the president of a company called Subway Russia. We have the master franchise rights from Subway for Russia. And what that means is we're a separate company related to the Subway brand only by contract. We acquired the licensing rights, so we are the franchisor in the territory of Russia and have been doing that for a number of years now. I'm often asked, how did you end up in Russia? And my typical response to that question is to say, what was a series of bad judgments? And that, of course, is joking. But I ended up there because I first had a real interest. I was kind of fascinated by the whole concept of the post-Soviet Union turning from a command economy to a free market economy, where one day you had economic activity, production being directed by the government, and then suddenly there wasn't a government, and the free market system took over. And I was fascinated by how that was working. And then everybody was very familiar with the great success that McDonald's had in Russia. And so I talked to a couple of friends of mine who I went to school with. My background is, as Steve's, is legal. And I had a couple of classmates of mine who, one of whom was a hotel developer, another was actually in the fast food business. He had been the master franchisee for Burger King in the Hawaiian Islands and some of the Pacific Islands like Guam and Samoa. And so I talked to them and asked them if they would be interested in taking a look at Russia and the QSR, quick service restaurant field there, and they were. And so we started taking a look. At the time, we were actually thinking about taking Burger King to Russia. We made our first trip over there and met government officials, some private capital people. And during that trip, we wanted to go and see the famous McDonald's site, which was just off of what was then Gorky Prospect, not too far, maybe about a mile from the Kremlin. And we went there. It was a late September afternoon. Mid-afternoon, it was cold, about 45 degrees. It was raining, and there were about 2,000 people standing in line at that McDonald's to get in and buy hamburgers. And that store had been open for over a year.
Well, it still is the top 2 store in the world as of today, still.
But we looked at that, and my thought was, wow, maybe I could even make money here, with that kind of consumer demand. So we were kind of hooked, but we saw Russia as a huge opportunity. A country of 140 million people, huge consumer demand, very little consumer marketing. Nobody really in our field. We were interested in franchising, so we saw franchises. We're not in the restaurant business. We're in the franchising business. And McDonald's had been first to the market in the fast food business. We were really the first company to the market in the franchising business. But we realized that there were tremendous risks. There was market risk, there was capital risk, there were currency risks, there were political risks. You had corruption, you had mafia problems, there was rule of law issues, no civil legal system existed. We didn't know whether our contracts would be enforced. We didn't know, you didn't have a history of entrepreneurship, and so we looked at that and said, what could possibly go wrong? So we spent some time there and realized that Burger King was just a little bit too expensive a concept for us to deal with. Again, we wanted to be in the franchising business, and the cost of opening a restaurant like a Burger King is about $1.5 million investment per restaurant, and we didn't think that we could get the kind of development that we were looking for if we had to find franchisees who had that kind of money. So we went around and started looking for a different concept, and settled on Subway, which is a much smaller investment. We thought it was within reach of a lot more people in Russia, and so we got the development rights. We negotiated for the development rights in Russia and started our business there. But again, as I said, the risks were large risks. There were great risks and a lot of them. And I say this without hesitation. Doing business in Russia is not for the timid. There are bumps in the road. There are lots of bumps in the road, and we hit a lot of them. But we have
Jim, I think it's important to mention that if we look at it even today, at the average check, the number of transactions per location. I mean, I know we had this at Wendy's. We have this at Nathan's. The average check tends to be 50% higher in Russia than it is in U.S. If you look at the average check for Wendy's, it's $6 in U.S. It's $9 in Russia. So I mean, you obviously have the same.
Yeah, we do. But, we sell our products, and if you walk into one of our stores in Russia, it's no different than walking into a Subway in Connecticut or Tennessee or California. The stores look the same. The products are by and large identical. We hope we have the same level of service, but we sell our sandwiches in Russia for higher prices in dollars than are sold here in the U.S. Our food costs we've gotten under control, so we've met and solved a lot of the problems that a business like ours has to solve. I'd like to show you a couple of slides to show you where we are. Could I see slide 11, please? This slide shows the growth of our business in number of restaurants In 2006, we began actively and aggressively franchising in 2004. 2006, we had 19 restaurants. The crisis came, the international credit crisis came in 2008. Interestingly, that had very little impact on our business. And the reason for that is that we were not, our franchisees by and large were not exposed to the credit markets. But for a very funny reason. Credit was too expensive in Russia. You know, the borrowing costs were so high that you couldn't borrow much money in Russia in our type of business and think you were ever going to make a profit. So our franchisees tended to be cash buyers, and they would open their initial stores and then their second and third and fourth stores with cash rather than with credit. So when the credit crunch happened, we didn't have much exposure, practically zero exposure to the credit markets, and you can see. From 2009 to 2010, we doubled the size of our system. From 2010 to 2011, we doubled the size of our system again. In 2012, we opened over 200 new restaurants in 2012. Now think about that. That's 2 restaurants every 3 days, year round.
Where do you see the potential, Jim? In light of what's happening, so I'm sure you've seen a slowdown in per-store operations, as most of us have in the QSR business.
Yeah. We started, it's part of the risks we currently face. But let me show you one more slide before we get there. Can I see slide 12, please? This shows where we have expanded to in Russia. In 2004, we had 10 stores in 3 different cities. Well, now we have 678 stores in 119 Russian cities. So we have subways now from Kaliningrad all the way to the Sakhalin Islands. We opened 3 stores in the Sakhalin Islands this past year. So we now are literally from sea to shining sea. With that kind of growth, when you see that kind of explosive growth, we opened another 200 plus stores in 2013. With that kind of growth, because with the growth of those stores, you get the same consequential growth in your revenues and your profits. So if you'd show slide 13, please. With that kind of growth, we've shown some pretty healthy returns on our investment. This is a chart that shows cash-on-cash dividends that we've paid out to our investors. In 2011, we paid slightly over a 50% dividend. Cash on cash to our investors. In 2012, nearly 100% dividend. Last year, we paid a 260% dividend, cash on cash, to our investors. That means for a $100,000 investment, our investors got $260,000 in dividends last year. Now, that's a pretty healthy return. But that's the risk premium we thought we would see when we were addressing all those risks that we looked at when we started the business. This was actually what we projected was going to happen in our business.
Thank you.
But what's happening now?
Sorry, go ahead.
Okay. To get to your question, what's happening now? We started actually seeing a softening in our business in really the fourth quarter of 2012. We started to see sales still growing, but tapering. Our franchise sales were still good. The profitability was still good. But we started to see what looked to us like a trend. And guess what? Surprise, surprise. It turned out that our sales, which tend to move, in the kind of business we're in, it tends to move right parallel to economic activity and in a country. When the economy is strong, our business is strong. If the economy starts getting soft, our business starts getting soft. And we started to see a softness in our business that really went throughout 2013 and now into 2014.
Okay, thank you, Jim. That's moving on to Michael. You have been a very successful retail expert in Russia. I think you are sort of a living example of an American success story, but by a Russian in Russia. Can you share with us your story of starting at Samsung, going to a $1.2 billion IPO, and then challenging IKEA, which by all indications has #1, 3, and 5 most successful stores in terms of revenue in the world?
Good morning, everyone. Alex, thank you so much for this introduction. Jim, by the way, I was staying in the line in McDonald's in 1991. So probably we know each other already more than 20 years.
The guy in front of me.
Oh gosh, McDonald's was a safe, really. It was a heaven for us. In 1991, there was nothing in Russia, only Pepsi, even there was no any Coca-Cola. Okay, so let me start from the slide number 37, please. So briefly, I'd like to tell a little bit why I'm in the retail business. I started in 1994. I was 21 years old in a Samsung Electronics company. Then I joined a video company as a shareholder, and it was beginning of 2002. It was a relatively small company at that time, and I worked as a managing director, as a commercial director. I ran business for almost 7 years. And end of 2007, we made IPO. We went public, and our company has been evaluated as $1.2 billion. And we believe this IPO was very successful. NVIDIA, it's a leading consumer electronic chain still in Russia. It has 6 billion revenue last year. And I'm still a board member of this company, even though end of 2009 I managed to sell out all my shares, and I decided to found, together with my partner, another company, and this company named Hof. So I will tell later about Hof. And I'm also a board member and a shareholder of Sovcombank, which is one of the leading Russian consumer banks, which has become famous during last 3 months because it has acquired GE Money Bank in Russia. So let me continue with the slide number 28. So what Hof is about? We got an idea that in Russia the home furnishing market is really completely, how to say, unsaturated. So when we look for European markets especially, they got a lot of big and box concepts. And IKEA has never had market share more than 20%. In all European markets, I would say there was a big room for concept like Hof. It's not usual for United States, because in United States you got Crate and Barrel, Rooms to Go, and Ashley Furniture, maybe the leading home furnishing retailers. But our concept is like a good IKEA, I would say. We sell products which are a bit better quality. There is a possibility to do catalog sales and better service. So we decided to develop it. We started from scratch. We founded company in 2008. We already managed to open first store in April 2009. And believe me, it was not the best time, because all our friends, they told us that we are nuts, that we are not optimistic, that we are really crazy people to develop business in Russia just
post-crisis.
I would say post-crisis, because in 2009 the market for home furnishing went down by 40%. So you should be really bold to develop the business in this time. But from another side, it was a very good opportunity, because all the costs, they became in class. So every year now we are growing by 50%. This year we become second largest player in Russia after IKEA, and I think we are gradually catching up. We got 9 stores, 4 to be open in next 12 months. I think we are really doing good job online, because 10% of our sales are online sales nowadays. I think our omni-channel strategy really works in Russia. Could I get slide number 31, please? So I just like to mention that Russia is the strategic market for all European companies. And the reason is very simple. Russia is the largest market in Europe. And it's still in many areas, productivity of Russian retail market is less than, and still has a huge potential. For example, sales per employee, sales per square meters, they are nearly twice low than compared to European productivity. However, all European retailers which are presented in Russia, they are very successful. For example, as Alex has mentioned already, IKEA. Top 3 stores in the world of IKEA are located in Moscow. If you talk about German DIY retailer Obi, top 3 Obi stores, worldwide ranked, are located in Moscow. Same for French company Auchan, a large grocery store. So all businesses are very successful and promising. And no one planned to exit Russian market. Despite the crisis, everyone planned to start even more, I would say, fast expansion. Despite slight decline, what we have now, we got crisis, really crisis 5 years ago, but now I would say it's small decline. We also have, still all companies, they continue their development. So can I get a slide number 30, please? So what are the major retail trends? First of all, market still is not consolidated, and what we could see by success of company like Lenta, they managed to create a very good business within just 5 years. They, I think, at least triple their size of business. So all successful retailers in Russia managed to triple their size of business within the last 5 years. I think these kind of stories, they are simply not, how to say?
Not heard.
Not feasible at saturated markets. So this is a huge opportunity. E-commerce is a good opportunity. Competition is strong, but still there are a lot of rooms for improvement. Even though retail market growth last year, I think it was around 6%. This year, considering the decline, it could be around 2%, but still e-commerce is a huge opportunity, and there are some sectors, some segments of the market which are growing faster than other sectors. So all the time you could find a good opportunity, you could make a successful story. So can I get slide number 34? So what challenges do we have now? I don't want to talk about sanctions. We in Russia, the people who are in real business, we try to stay out of politics. I want to talk about possible implications of sanctions and how we are prepared to react. Because I witnessed already 2 crises, so we know it's like old actions for us. So first of all, decline of customer demand. The only recipe what you could do is to do more aggressive promo and to adjust your product matrix downwards, because a consumer has less purchasing power. So the major issue is the currency risk, because for example, in my company or in some other companies, from 20 up to 70% of business is dependent on import products. So with the ruble being devaluated within the last 3 months by, let's say, over 15%, the purchasing price is going up. So then eventually what we need to do, either to adjust our product metrics or to get better prices from our suppliers, try to fix all expenses in rubles, for example. The major issue is leasing agreement, because all developers in Russia, they try to fix contracts with a dollar base. So you have to do with it. Also, the big problem is Russia is not a homogeneous market. There is a striking difference in purchasing power between Moscow and regions. And when there is a decline, I would say the situation in Moscow market is relatively flat. But you could get a severe decline in small cities in Russia. And then you need again to adjust your product metrics to do more differentiated product mix between Moscow and regions. When we have a strengthening of competition, which is an implication of a lowering of sales, of course we have to do with exclusive range, and nowadays I think over 50% of our products, they are exclusively, all Russian suppliers, they produce exclusive range for us. Or you start direct purchasing more and more from China, and you get efficient in this way. Also, it's very important that during last 2 months, the central bank has increased interest rate by 2%, from 5.5% to 7.5%. So then the only thing you can do is to get more money from suppliers to improve your stock turnover or to improve your stock AP ratio. And the last one, but for my company it's quite crucial, is lack of professional trade space. So then the only chance for us, either we start to build our own big boxes, or what we actually do, you just focus on e-commerce development and you try to get to your customers without, brick and mortar stores.
Excellent. Thank you so much, Michael. That was very, very interesting. Finishing off with you, Dima. You are a very successful Russian fund. Are you still looking to invest in Russia, or are you now looking to invest outside of Russia?
Thanks, Alex. But maybe first we can come to a macro level for a few seconds. Can we go to the slide 20? Okay. There has been a lot of discussion lately about the state of Russian economy. We saw 1.2% growth in 2030, and for a cost range for 2014 from around 2% on the higher end, and to contraction more than 1%. This is below what we have seen in the past and what we expect to see in the future. But looking beyond the short-term growth numbers, you can see a lot of reasons why we remain very excited about Russia. Like Steve and James mentioned, a population of 143 million, the 9th largest consumer market in the world, consumer spending already at a healthy level, and generally in long term increasing. By 2020, Ernst & Young analysts believe that Russia could become largest consumer market in Europe and 4th in the world. And I think it's hard not to see opportunity when you have this kind of scale and growth potential. But you often hear international businessmen talking about the risks investing in Russia. But what's interesting is that perceived risk among companies that are not present in Russia tends to far exceed the perceived risks by companies that are actually present. Like Michael mentioned, international companies in Russia, for the most part, do very well, compared both to developed markets or other BRIC markets. And the bottom line is that Russia is an enormous market. Okay, that said, having strong local knowledge and experience is still very important. If we go to the next slide. Okay, but I should say now it's probably difficult for me to talk about the current business environment in Russia without dealing first with big elephant in the room, the Ukraine situation. For sure, the situation in the market is volatile. Everyone trying to guess what will happen next, and as ever, crystal balls in Russia are not very clear. But I think we shouldn't overstate the impact of Ukraine, particularly in terms of long-term impact. Speaking about reforms, the key areas where reforms are still needed fall in the political and regulatory arena. I will touch it in more details later. We have seen mixed success with initiatives aimed at improving labor skills across the country. A lot of people have mocked Russia and the state ambitions of developing an innovative economy. But I think the people who take this position fail to notice, I think, a lot of really positive developments that have taken in this field.
Dima, if I may, going away from macro analysis and more into your specific fund, what you guys are focused on and what you are looking at down the road, what are your projections? I mean, maybe you could touch up upon more of a macro rather than a macro analysis.
Okay, to save the time, let's turn to micro level. But I think for every private equity players, micro level is very important as well. It's not so bad in Russia if you look from a long-term perspective. This is my main idea.
Of course. I think we all agree on that.
Let's change maybe to slide 23. Okay, looking more specifically in Russia's private equity market, the area that is closest to our hearts of VIM. This is where we see some of the most exciting opportunities. The fact is that while Russia had some big IPO years pre-crisis, a significant part of the market can simply not be accessed via the public equity market. To get beyond the obvious names and into untapped opportunities, this can really be done through private equity. Private equity has proved to be a very successful way of reaching opportunities in sectors like technology, consumer, healthcare, and other. And if you look at our own portfolio, this is the sectors that we have had great success in, I think. Okay, let's go to the next slide. And on this slide, I can show you the pretty same idea with Michael mentioned. When the markets are volatile and international players start to question whether they invest or not, I think this is the best opportunities open up. And for us, we think it's the best time to buy. Because there are a lot of segments that are performing much better than total GDP. You just have to find the right niche. On the chart on the left, we present just some of the attractive growth capital opportunities over the coming years, such as equipment rental, paper tissue, chocolate production, fast food, and maybe the opposite for fast food, healthcare. Also, on the left side, on the left part of the slide, you can see hospitality real estate market, and we can see here also is still huge potential for growth.
Dima, one question for you. Your most, I would say, famous investment or public investment has been the investment in the first Four Seasons in Russia. Maybe you could share with us very quickly, before we go to the question, your story with Four Seasons and the historic significance of the whole structure, the whole magnificence of the palace there.
Okay, you are right. The Four Seasons project is the project which we're very proud of. Yeah, you're right. Can we have slide 26?
Nope.
No? Maybe previous one? Yeah. Here we can see some of the picture of this beautiful palace. And you should know the Four Seasons Hotel in St. Petersburg. It's the first hotel in Russia from Four Seasons Hotels and Resorts. This was an ambition project with 183 luxury rooms, 2 excellent restaurants, and fantastic spa. The construction was very complex. In the very center of the city, and involving multiple partners, it's really significant added to our own experience and expertise in this space.
What was the total investment?
Sorry?
What was the size of the total investment?
It was above $200 million. But in our other investment, we are also happy to bring in Russia other leading international operators like Residors with Park Inn by Radisson and IHG with Holiday Inn Express. We are happy to have an opportunity to cooperate with outstanding teams like Four Seasons teams. It's really a great opportunity.
Thank you, Dima. We've reserved now 10 minutes for Q&A because I thought it was relevant that we hear from you what you would like to ask us. I mean, I think it's important to hear some honest questions, and we'll try to give you some honest responses in lieu of everything that's happening in our region. It's very difficult to see with the way.
Doesn't work. For the gentleman who was the master franchisor in Subway, how did you get investors for that? Are there private equity pools waiting to back new entities going into Russia? Or did you raise this capital outside of Russia?
It was all raised in the United States. We had individual investors. We also had a number of corporate and educational pension funds that invested with us initially. So the money raise was not that difficult. But it was viewed by everybody as a high risk raise.
How would you compare the enterprise value to EBITDA for public versus private companies? Or in general, how does the public market in Russia value companies versus when you see private sector opportunities?
Poorly. In a word, it's the Russian market trades at a tremendous discount to developed markets, more so now than ever. And to your question, from a private perspective, I mean, Sean might have a view because he's investing very heavily, as well as Dmitry, from a private perspective. But when I speak to private investors, they are typically looking at public comps as their benchmark, and will be looking to see discounts to those values, which are certainly north of 25% and often as high as 50%.
Hi, I was just wondering if you had any opinion about timing with respect to the crisis, the ongoing crisis in the Ukraine, or if there's any one or two things from a business perspective you're looking for in the next 1, 2, 3, 6 months that will change your opinion or change the way you think about the investment horizon in Russia?
Well, I mean, I think all indications are from everything that you read is one of the unfortunate things that I think there's a bad personal relation between Obama and Putin. I mean, the fact that, you know, when Putin announces that he will not take any phone calls from the White House and 2 days later Obama says the same, it doesn't bode well for diplomacy. So, you know, with those kind of indications, I think this thing may drag on. But obviously we're hopeful that diplomacy door is not closed. But some of the indications are that, unfortunately, this has become a very personal thing. And as you've seen, most of the sanctions have been geared towards the Putin circle, the inner circle. So, you know,
I think the status quo is likely to continue for some period of time. And I think by all indications, there's a desire within Russia, I think, to maintain a level of pressure on Ukraine as it works its way through its constitutional process and its elections. Obviously, both Europe and Russia have a very strong vested interest in seeing a particular outcome in Ukraine. And I think both sides will bring to bear whatever pressure and force or blandishments they can to you know, encourage the outcome they're looking for as the political process plays out in Ukraine. So I think until that occurs, I think we're going to continue to see this level of instability. That's my best guess at this point.
Yeah, from perspective of my business, we're not seeing yet any real impact on our business, but you know, looking at it in more of a macro standpoint, you have an already rather weak economy in Russia. You've got a very fragile recovery in Europe. So if this ratchets up, it's not going to be a good thing for anybody. They're not going to be any winners. Business-wise or economically, if this ratchets up.
For your supply chain, you're 100% self-sufficient from Russian resources, correct?
Pardon?
You get all your resources in your supply chain from Russia.
Our food product pretty much exclusively is sourced in Russia. We import things, but only if we can get a better price actually importing than we can get in Russia. We bring most of our equipment from the United States or from the UK. There's some equipment being manufactured in Russia now, although. But from a food source standpoint, we're pretty much independent. And our franchisees are all Russians. Our staff's all Russian. We have one non-Russian employee in our company in Russia.
So as this drags on, what do you think the impact will be on an investment? Do you think that foreign companies will think twice before going into Russia?
Well, I think we're already seeing that, and that's really the biggest impact of the sanctions, not particularly who's on the list, but the fact that it's a subtle, if not, perhaps not a subtle, but there's a discouraging aspect to big Western companies from doing business in Russia. I do think that we're going to, as a result, see a pivot to Asia. I think Sean alluded to that earlier, and we're seeing increased interest out of Asia to invest in Russia in the resources space and in other areas of the economy.
I could add to this point that all international retailers which are not Russia, they're not going to minimize their expansion. So what I mentioned, maybe they believe it's even a better opportunity now to accelerate their development in Russian market and to get bigger market share, because the cost of advertisement went down, the rental cost went down. So it's like short-term negatives versus long-term advantages. Maybe purchasing price, maybe let's say sales volume slightly went down, but if you have 10-year lease agreement and you have a chance to get now minus 20% discount, which you're going to benefit throughout all 10-year lease period of time, then you better develop your chain now, right?
I get a lot of pushback from particularly our Russian-raised analysts about investing there. They're concerned about corruption and corporate governance. So I was wondering if you could talk a little bit about that and minority shareholder rights.
Well, I mean, I think maybe, Sean, maybe you can chime in on that, because the creation of institutions like Russian direct investment funds with American-educated executives, with corporate governance, transparency, providing co-investment in Russia, I think it's a big opportunity to protect and to make people feel at ease. Maybe comment on that, Sean?
Sure. Thank you. I think Russia is really no different from any other developing market that you would be investing in. Frankly, probably would be more institutionalized that you would imagine. The country has done tremendous strides in legal system, in the foreign investment that was coming in over the last 10 years always came in with a corporate board, with minority protections. It's not always worked out right, but when you're changing such a big country like Russia, there are going to be some mistakes. What you have to look is not what happened to this guy or that guy, but what happened overall to the country over the last 10 years, and you'll see a very, very encouraging picture. The creation of Russian Direct Investment Fund was really to enforce that at the very high, very international, large cap level. So anytime we invest, we always invest pari passu with leading foreign sovereign wealth funds, with private equity firms, with pension funds, and we always look to secure a full suite of minority protection rights and then enforce them. And I think there have been quite a number of successful cases, including Lenta as well, where through enforcement of local laws and local courts, foreign investors were able to get to where they needed to go, like in any other developed market. So the partner selection is where people failed, not on the Russia as an economy, because returns across the board have been significantly positive, not in terms of growth. They were betting on growth, they got it, but sometimes they picked a bad partner, and more often than not, you could have seen that ahead of time. Have you done the homework? Some of the bad actors have been removed from the system. Some of them stayed. They will be also removed over time. But you have to look at the trend line, and the trend line is very positive, and that's what really gives confidence to us. And we feel comfortable underwriting a lot of investments together for foreign investors because we know that we can deliver.
Thank you, Sean. We have time for one more question.
Hi.
Hi.
Sorry about that. What are the chances in the Russian business view, not from any other view, just what you guys think from a Russian business perspective of an invasion of Crimea? Sorry, an invasion of Ukraine.
East Ukraine, you mean?
East Ukraine.
Well, I mean, let me try that one. I mean, I think as I alluded to earlier, you know, look, none of us have a crystal ball, and obviously we're not sitting in that important seat in the Kremlin, so we're not making that decision. But, you know, I think if you look at what the market is saying right now, and that's probably the best indicator of, you know, how the market is you know, how people are reading this or probability weighting things. I think there's a perception that this sort of current situation of instability is going to continue, but short of probably an all-out invasion.
I think that's it. Thank you so much for coming. I hope we answered some of the questions on Russia for you.